All right, guys, welcome back to my stock market technical analysis channel. I'm going to give a quick update on what I'm seeing this Monday morning, and hopefully everyone's able to follow along. But before I do, give me a thumbs up, hit that like button. I really do appreciate the encouragement. Keeps the channel going and helps out the channel, so I do appreciate that. Let's get right into it. Let's see what we're seeing here on these stock charts. What is the market telling us today? And how can we actually use this information to make us some money tomorrow? So here's the thing. S&P 500, we've got some support, it looks like, right around this 300 level. I marked that out. That's kind of the gap right here. We have this gap. We have a series of gaps on the way up recently that we made, and most likely those are going to be our levels we're going to target against in the near future. And so far, that's playing out true. So there's your gap, 350. On the downside, there's this 295. I don't have it marked out. Let me mark that out. Sometimes my charts reset over the weekend, so I have to kind of go back in. I got to figure that out. But 295. So that's kind of the support, basically, of this gap right here. And then below that, we got this big gap down here at 286. I do think we're going to fill this gap at 286. And we'll have to see what happens at that point, but I do think that's a very clean area of support, and I think we're going to come down and fill that. We also have this head and shoulders completely in play. If you look at it, if I kind of just mark it out here with this pencil, you can see this is your shoulder, there's your head, there's another shoulder, pretty equal in terms of the same level right there. And then also, of course, you have the island cluster top reversal still intact, still in play. And so far, that signal has been profitable. If you took that short signal to the downside, you are profitable about 2.75% as of right now if you took it on the breakdown. So everything still looks good. You had the reversal signal, you had the breakdown, you had the back test, and then the failure, confirming that signal is still intact. But we need to break this, we need to break some levels in order to see further downside. So 300, is probably where, honestly, what I see, we've got this level right here. 307 to the top end, 300 to the downside. I think we're going to head down there and probably close the day around 300, maybe even break it or close near it. Tomorrow, I think selling continues. I don't think we're going to get up to 307, although we could. But the reason why I don't think we're going to get there is we already tagged it right here. So this was your run up into the resistance. This is the comment that I put out in the video saying, check out we're right at resistance, good area to short. We sold off. So I don't think we're going to run up. But, we could just ping pong back and forth within this range for a while and just consolidate before making the, probably what looks like a breakdown. But again, this could just be a consolidation and then a move higher. That's always possible. So again, we'll just continue to evaluate this short trade against this island top reversal, looking to probably stop out up near the high of the island. We don't want to see price action moving up into the island. That negates this as a reversal signal. And at that point, you have to get out. You have to cover your short and wait for the next opportunity. Let's move over to Qs. Qs. So this is your tech sector. Here's your support right here, 240, 50. It goes back to right here. You can see we tagged it right there and held it, several data points, several reactions right around here. We broke below it and briefly today, and then they recovered it. So it's still support. So 240, 50 is support. And resistance is actually, I don't have it marked out, but you can see it right there. There's your resistance. Oh, let's mark this out. It's about 242, it looks like. Slightly off. Yeah, we'll call it right about there. So you can see you held that as support back here, came down, tagged it all through here. And then it broke, so now it should be resistance. So we're at resistance right now, and we overshot it right here. Here's the wick where we overshot it just briefly. Still below it. So the close below 242 means we're holding as resistance. Should move down to the 240. and then we're looking for that to break. If that breaks, of course, you got a gap right down here at this 239. So we'll look for that. And below that, you're going to probably come down to this 232 level. So we'll just watch. Let me go ahead and mark out this 232. So there's your levels right there on Qs. We need to see those break. Here's XLV sideways. Again, my chart got messed up, but we're looking for a break of 90, 96.80, 96.75, a nice clean break. And you'll know it when you see it. It'll be a break and it won't be able to recover. And that's what we'll continue to look for. So this continues to just consolidate. XLF, we are below support, which now should act as resistance. So expect the financials to continue to sell off. And you can see here's your trend line moving up. Nice clean reaction right here where we tagged it as support, moved higher, but then we broke. So the support's been broken. We did a back test. So we can continue to back test, but ultimately this should prove to be resistance. Okay, here's Walmart continuing to act weak, up today slightly, but less than the S&P 500. You can see the S&P 500's up 1.2%, and Walmart is only up less than 0.5%. So continuing to show relative weakness. It's all about understanding what you're seeing. When the market's up, Walmart sometimes is down. When it's up more, Walmart's not up as much. It's just relative weakness. It's continuing to show that it's weak. And so we'll continue to stick with this trade. This thing at this point, the more that it shows weakness, the more probable that it gets that it will head down and touch the bottom of this bearish rising wedge. So that will continue to be the trade. And the entry, obviously, if I zoom out, was right here at 127.74. And that will be a trade. That will be a move about 17% gain in that trade if that continues to work out. But as of right now, I see no signs telling me that it's not going to work out. So we'll continue to just let this, do what it's going to do. Let's look at Apple. We want to watch Apple and Microsoft. Very important to follow these. This will tell you what, in general, the market's going to do. Apple's up today. It bounced off support. So nothing's really broken in Apple, and I've pointed that out. I've consistently mentioned that, there's no sell signals in Apple, and so it's still bullish, essentially, and still uptrending. We are starting to get some negative divergences. No, not exactly, but, here's your negative divergence in the RSI right here on Apple. This is just an hourly chart, so it's not setting us up for anything major, but this negative divergence might be the trigger for breaking this support trend line right here. And so you can see, you made the high right here with a higher RSI, and then you made a higher high right here, but the RSI did not get as high. Same in the PPO right up there. So that tells me that momentum is fading. That's what that says, that even though it made a higher price, it was done with less participation. Momentum is starting to fade. So that sets this up for a break of trend. But again, it has not broke the trend. So you have to wait for the breakdown in order for that sell signal to trigger. Trading is all about evaluating setups and then waiting for the triggers. And you take your trade based on triggers, not on setups. So that's very important to understand. Here's Microsoft, same chart, essentially. You've got the uptrend line. We have not broken support. We tagged support right here and bounced off of it. RSI is, negative divergence in the RSI right there. And you can see here's your high, a higher high, but on lower RSI. So momentum is fading in Microsoft as well. So you have the setup for a reversal or move down, but you do not have a break in the trend line support. So again, you have to wait for that trigger. Let's look at DraftKings. So this is an idea that I've pointed out here for probably the last couple weeks. It played out, pretty perfectly. I covered my short this morning and took my profit. And basically, here's what we saw in the trade, just to cover it, and then we can outline, the profit and all that. But here is the uptrend that DraftKings had, and we saw this, and I noticed that, this was a nice clean uptrend, just very easy to spot. So I was waiting for a breakdown. You have negative divergence. Let's see. Let me make sure you do. Yep, you have it right here in the PPO, and it was also in the RSI back here. So you can see lower lows, and then here's your price. Here was your high, made a higher high, but on lower, price percentage oscillator or PPO. It's the same as the MACD essentially, and you had negative divergence in the RSI. So there's your negative divergence with higher prices and lower momentum indicators. Then, so we knew there was a setup for this to break, and it did break right here. So as I zoom in, here's your breakdown of trend. And when you break trend, you're either going to do one of two things. You're going to just, crater straight down, or you're going to do kickbacks. This market, given that it has a lot of money pumped into it, seems to want to do a lot more kickbacks than just breaking down. It wants to do these kickback rallies. So that's what we got here. What I did is I originally took the trade on the breakdown, wrote it down here, but then this day right here, I noticed that it wanted to pop up, and it looked like it wanted to run up into a kickback rally. So I covered my short trade right here in this level. And that was even profitable, just not a lot, but I was profitable. The stock ran all the way up to resistance, right back up to back test this trend line, and I reestablished my short trade right up here. And then I've held it through all this sideways action, was underwater just briefly, and then we got the nice impulsive breakdown heading all the way down this morning to 3108. And as I was looking at this morning, I noticed that there was a little bit of this was resistance back here. You can see the wick. See the wick as it ran up into there. So I marked that out, and we're going to just leave that there. So I covered my short right there. And that was, for me, that was a gain of about 23.5% on that short trade, plus a couple percentage points right here, 1 or 2. So it was about a 25% gain trade. So this one for now is, we could run up and tag this as resistance up around 35, 37. That'd probably be the area where you could look at maybe reshorting if you were going to do so for a continuation move down. But for me, I'm going to watch it because I think the meat of this sell-off is maybe over for now. This might want to just consolidate sideways for a little while. And a 25% gain in, 2 weeks basically is a pretty good trade. So I'll probably taper back my covering of this unless I see this thing, running up objectively to levels, and I can point those out. But pretty good gain on that one so far. Redfin, I exited this one a while ago. I just, it just wasn't doing what I thought it would do. It's been back testing the entire time. So here's your trend line. Mark it out. It's right about there. And it's right about there. And what it's been trading below trend, but it's just been creating a new trend line right below the major trend. So I guess what I will probably wait for is another break. This one could be a trade if it breaks this trend line. So we have to just kind of wait for that impulsive breakdown, that sell signal. So I've exited this one a while ago. This was showing relative strength. And when comparing this against DraftKings, it was clear that DraftKings was going to be the weaker position. So I really just rode that DraftKings one and didn't really care too much about this one. But you can see below trend, making a secondary trend. It should break probably pretty soon. So if it breaks and we get a sell signal, I'll point that out, and I'll look to probably jump on that trade for a short trade. But for now, I don't see anything highlighting it. We do have negative divergence. I don't have my PPO up on this one for some reason, but there's your negative divergence on the RSI. So, higher price right here on fading momentum. So we do have it. So it should set up for a nice clean breakdown. We just have to wait for that sell signal or that trigger, and we don't have it yet. Okay, Facebook. So this one started to break down, and it's actually broke its support level. you can see this is the support right here at 223.40. We held that for quite a while. We held that actually for about a month, about 5 weeks, really, 37 trading days. And so we held that and we broke it just recently. So here's your breakdown. This is why you don't chase moves though. When you see a breakdown, if you didn't take the original breakdown, you don't want to short or chase a move after it's happened. You want to wait for the fake out move or the objective area to short where your risk is really low. And so now you're getting the kickback rally. I suspect today they'll probably try to close it. Well, they're going to probably tag this resistance. They might not close it there, but maybe tomorrow we gap up or there's some sort of move that runs up and tags this 223 level. And that's your area to short. All right. So if you get the breakdown, then you get the back test, and that's your objective. That's resistance. That's where you want to short. You want to short at resistance, and that keeps your risk low. And then just manage the trade there. So I would look for that. If you short here at resistance, what they might try to do, which is very common, is they'll try to gap it up over the resistance, and then it will instantly sell off back below resistance. But that original gap will freak you out because it'll open up and you'll be you'll be down. But you want to wait for that to kind of wash out and settle on the hourly chart. So you might see a move where they open it up higher, but then it instantly sells off and just will continue to confirm this resistance here at 223. It's about 223.40. So watch for that. But I might be looking to take a small short on Facebook up around there and just manage that trade. Here's XOM. This is a stock I am actually interested in owning longer term, but I don't want to buy it. I don't want to buy it here. What I'm continuing to wait for is another flush out, another move down, probably undercutting these lows around $30, and also looking for a dividend cut. If they can cut the dividend and we get a washout move, that's where I like to buy these things. Let me close that ad. You want to buy, you want to buy stocks when everyone is afraid of them washing out. So anyways, here's the chart that I see, and I've been kind of tweaking this and trying to adjust it, but this is what I got as of right now. It's not the cleanest uptrend, but we had a reaction here. Here's your reaction low back in February or March. Here's another reaction and then another one, and then we had this full back test right here. So I just connected this just this morning. Maybe that's the uptrend, but regardless, the uptrend is broken. This uptrend that the stock was in is clearly broken because we had this sideways action. We were moving up right here, but then we pretty much just went sideways right there. So there's really no uptrend that you could make. We have broken whatever uptrend was in place back here, and this looks to be like a back test. Another thing to pay attention to is maybe this is a head and shoulders. We're seeing a lot of this kind of head and shoulders stuff across different stocks and markets, but you've got this, it's somewhere right in here. Might be a shoulder. This might be another shoulder, and then there's your head right up there. So maybe that is a head and shoulders. If that's true, your neckline looks to be about right there. And there's your neckline. So if we break that, I would say 40, we'll just call it $43 for benefit of the doubt. Could be 43.50. And so if we break that, then that might set this up for the next kind of big trend move, which would be down, most likely putting us below this $30 lows and starting to move lower. This will most likely come if the stock market, has another substantial move down. So that's kind of what I see in Exxon Mobil. We do not have negative. There's no negative divergence. I mean, there is negative momentum in the RSI and the PPO, but it's not diverging from price. So that's another key thing. Just because you have negative momentum, which is this, you can see the RSI, you're making lower lows, lower peaks basically. That signals that momentum is fading, but price is also fading. You have a down channel right there. And line it up right there. There's your down channel. You could watch that too. A break above that would be bullish. So let's watch for that. Maybe there is a long trade here. I don't see divergence telling me there is a long trade. I don't see positive divergence. Well, you do have positive divergence in the PPO right here. Let's look at this one just real quick. I'm just kind of seeing it right now. So you've got, if I can draw it out without catching this line, something like that. So there's positive divergence where you have lower lows, but the momentum is actually picking up. So that's interesting. Maybe there is a bull trade here, a long trade. We'll have to wait for the trigger. If this is going to break this resistance right here, then, and it's pretty clean resistance, pretty clean down channel, and we have positive. So maybe we get a trigger or a break to the upside, and that would set us up for a long trade. You do have a nice gap right up here. This is your island top reversal right up in here. So, if this wants to move higher, it could move and back test this gap. But I think it's not going to do it. But again, just wait for the breakdown or breakout. So that's really all I can say on that. There is a potential long trade here. There also is a potential breakdown and a move lower. So kind of mixed signals on this one. And that's really where I'm going to end the video. So thanks, guys. Really appreciate it. If you stayed with me this long, then leave me a thumbs up, leave me a comment, and I appreciate the activity. Catch you on the next one. Bye.